Dollar CAD daily forecast January 17th, fxempire.com. The dollar Canadian dollar fell during the light session on Monday, but as you can see, the chart, we have drawn a massive triangle which has formed over uh, really the last, say, 6 or 7 months. And this does show that the range is tightening as people were trying to figure out, make heads or tails of the oil markets, since the Canadian dollar is so beholden to the oil markets and demand. You can see that the range is tightening, winding, 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 and as such, an explosive move should be coming. Same thing with the oil markets. We are banging up against 105 in the light sweet crude, which is a massive resistance area. So that leaves us with a couple possibilities. A breakdown below either one of these lines signals which way to go, with one caveat. The support level at 101 is just below a breakdown of this triangle, and it actually goes all the way down to about 99. With that in mind, it seems like there's a lot more support than there is resistance. However, if we do get the breakdown from this point and get below 99, we of course would be forced to sell. A break above the top of the trend line runs into a lot, top of the triangle, the downtrend line runs into a lot less resistance than we do support. And in this environment of risk off, we feel that perhaps the dollar is the safer of the two to own. Of course, problems in Iran with the Straits of Hormuz and that whole drama could, of course, cause some type of super spike in oil, which would make sense that this pair fell. Over the long run, though, we feel that the market has started to change its tone and has become quite comfortable above parity. Because of that, we prefer the upside, but we'll take the downside if we can get low enough.